Are you trying to figure out how to make your first rental property in the Seattle area cash flow? This is a very high priced market, and a lot of people are going to say the math is not mathing. I would never say that. Home prices are sky high in Seattle, right? And interest rates are higher than they have been in the last couple years. And even if you do manage to get a tenant in your property, you're still probably looking at negative cash flow every month. But what if I told you there is a smarter, more profitable way to invest right here in Seattle and it doesn't involve flipping houses, risky tenants, or becoming a full time property manager? Well, stick around because I'm going to show you exactly how midterm rentals can turn a negative cash flow rental into a money making machine, even as a first time investor. And if you're thinking about buying a property in Seattle or anywhere else, and you want to explore midterm rentals as your investment strategy, let's talk. I'm happy to help you find the right place locally or connect you with one of my investment savvy agent partners in your area or out of state, because I also do a lot of investing across the country. Okay, so let's talk about why traditional rentals don't work very well here. Seattle's real estate market is super strong, right? It's a great place to own property. There's job growth, the tech economy, rising demand. We've all got it, and buyers got it too. So we have more people wanting to buy properties and paying high prices for properties than we have homes available. And so prices seem like they just keep going up. The problem is, a lot of places you could rent a house for the same price as paying the mortgage. That is not the case here. You could rent a house for much cheaper than it would cost to actually buy it and own it and pay the mortgage. Not so great if you want to be a landlord. So, for example, you might buy a $300,000 condo, rent it long term, and walk away with a $400 per month loss. And that's before the roof leaks or the HOA spikes the monthly fees, right? And this is the exact situation that I see new investors walk into. They're excited, they're motivated, and then they're disappointed when the numbers just don't work well for them. So, what's the option here? Midterm rentals are one thing to consider. These are furnished homes rented for 30 days or longer, typically. So think traveling nurses, corporate consultants, families in transition. Like I've had people approach me that work for the insurance company and the family's home burned down and they want to rent a house that they have. Or people that are in a medical internship and it's going to take 6 months and they want a place to stay that doesn't feel like a hotel. So here's the magic. Those midterm rentals bring in more income per month than a long-term lease typically. But you don't have as much churn as you would if it was like an Airbnb vacation rental where people were just staying for 1 or 2 days, a weekend, a week, that type of a thing. So it's kind of a good sweet spot between the lower priced long-term rentals and the highest price short-term vacation type rentals. You're adding value because there's furniture there. They don't have to sign a 1 year lease. They don't necessarily have to get all the utilities into their name. So it just makes it easier for tenants who are more transitory, but for whom a hotel is not a great option. So let's run the numbers on a sample here and see what it would look like. So if you bought a condo for 300,000, you might get 2,300 for your monthly payment, and your long-term rent might be 1,900 a month. So you'd be approximately $400 a month negative cash flow. But if you could rent that same unit for 2,700 per month as a short-term rental, you'd be positive by over $300 a month. So it's a shift in strategy and it can potentially put more money into your pocket there. And this is the kind of smart investing that I want you to consider and be creative for your next move. Now, it doesn't come without challenges. So reach out and I will help you find a property that fits, or I'll connect you with a trusted agent in other areas across the country and we'll find one where this is going to work. You can get my contact information below or head to my website, homeproassociates.com, to get started. Now, who rents these things and why is this a good, feasible strategy, right? So, traveling nurses, tech workers, families who are house hunting, maybe they sold their other house and they're waiting to buy their next one, students in certification programs, these are your future tenants. These are the people who want stability and flexibility, and they're going to pay you higher rents in return. You will have more turnovers, but typically there's not much damage because they haven't lived there for that long. You'll still have protections of damage deposits and insurance if anything crazy does take place. Now, in order to get started, you will need to furnish the property. The budget for that can be $5,000 to $7,000 for the basics. More, the bigger the property is. You'll also need to do a deep clean between the stays and figure out what you're doing with the utilities, whether you're keeping those in your name or making the tenants turn them on and pay for them directly to the utility providers. You'll also want to get some great listing photos, but you can use those over and over again. So once you're set up, it's pretty much a rinse and repeat process. You'll need to manage the bookings and decide how much you're going to charge, and then handle the turnover as well as move in and move out. So you can do that yourself, which is what I recommend if you're doing it as a local side hustle. Professional property managers in this space can charge like 40% of rents. So it's not cheap. Now, what are the pros and cons? One pro is your higher income potential. It's better than like a traditional year-long empty house lease. You typically get pretty reliable tenants, fewer headaches than Airbnbs, and it's great for self-managing investors. The cons are furnishing up front costs more, and there's going to be more hands-on involvement. It's kind of a combination of a passive investment and a business. You may also have gaps in between the tenants. If somebody moves out, you might not have somebody ready to move right in. So you have to pay on a vacant property while that happens. And you'll need to adjust your rents seasonally. Someone is going to pay more to be in Seattle in the beautiful summer weather than they're going to be paying to be in the dark and rainy weather, right? So how do you do it? How do you market and list your property? So once your property is ready to launch, where do you find tenants, right? There's some top sites: Furnished Finder, Airbnb, Zillow, Facebook groups like Traveling Nurse Housing Seattle, right? Each platform has different sort of quirks and idiosyncrasies, so you want to test and track. And Furnished Finder is definitely a favorite for traveling nurses, as Airbnb also gives you flexibility with the availability and the length of stay. Typically, the shorter they're staying, the more money that you'll get, but the more work involved as well. So if you're ready to build real estate wealth and you're curious where midterm rental strategies could work for you, click the link in the description below or visit homeproassociates.com, and I will walk you through the options, run the numbers, and even connect you with a top tier investment agent if you are looking outside Seattle. So I'd love to help you start smart, avoid the rookie mistakes, and make your first investment property one that actually cash flows. Imagine that. So don't forget to like this video, subscribe to the channel, and drop a comment if you've considered doing a midterm rental or already have one running. I've got more videos coming up on house hacking, first-time investor tips, and creative real estate strategies here in the Pacific Northwest. So stay tuned, get subscribed so you don't miss those. Thanks so much for watching, and I will see you in the next video. Bye.